Awesome, Brendan. Thank you so much for coming and joining us today. I really appreciate it. I think maybe just to kick off, if you want to just give us a quick intro to yourself and a little bit about Secha.
Yeah, absolutely. And thanks for hosting, and thanks for everybody for attending and sharing about your business. Is really exciting. So maybe even before that, just thank you to Civitas for, I think, having a unique network, which is one of the reasons that we wanted to explain the Secha model and the Secha investment criteria here. Because I think this really is a differentiated network with a lot of exciting people and businesses. So briefly about me, I'd like to start off with the accent. Otherwise, people don't really listen to anything else. I do live in Johannesburg. I've been here 11 years, but I'm originally from Boston. Like I said, as background, worked at a hedge fund on the bond side for about 5 years, a couple of VC funds in the US, and did my MBA and came over here with Bain & Company, which was a much more positive thing to say when that happened. But yeah, had a great 3 years there. I think I see another Bain alum on the call. And that's when we started Secha Capital. So I'll give you the headline for Secha Capital, then Paul, you can kind of prompt me if I should then expand. I have a couple slides I can share. But succinctly, we're a growth stage investment fund. So we are, especially for this call, I'll focus on, we're not VC in the classic sense. We don't take tech risk. We don't invest with a burn rate. It's usually adolescent stage companies. But we're also not big PE. We don't write 100 million Rand checks and try to take a majority stake of your business. In terms of stage and sector, we set up what we felt was a gap in the market, and that would be check sizes of, especially in our first fund, as small as 3 million Rand, but now our average check size is about 10 million Rand. We can go slightly lower, we can go up to 40, and generally for significant minority equity stakes. We can also do convertible debt. What we found was that most other funds in this market couldn't write a 5, 10, 20 million Rand check. Their fund size would preclude it. And they weren't looking in businesses, and that's the other thing, in sectors that were anything but winner take all. So and I'm happy to flash a slide up. We're not looking for unicorns. If we get them, great. But we don't need 100x returns for our fund and our investors to be happy. We're looking for 3 to 5x growth and being there with the entrepreneur. That's where we see a lot of opportunity in the market, a lot of low-hanging fruit. And then lastly, kind of influenced by that Bain background, we also believe that it's difficult for companies in the adolescent stage to recruit, afford, develop, retain high-powered human capital. So when we make an investment, we also offer, we don't force you, but we offer what we call an operator investor. So that's a member of our team to work with you day to day for a year. And that takes many different machinations, which I can also expand on as either a chief of staff or just somebody helping you with CFO functions, capital raise, HR, go-to-market, sales, etc. So that's the very brief elevator pitch. Paul, do you want me to expand or defer to you?
Yeah, Brendan, I think if you dived into the slides, and then what we'll do is stop the recording just so the rest of the community gets the basics, and then we can go to a little bit deeper question. So that'd be great if you just went a little bit deeper for the recording part.
Great. So maybe what I'll share is one slide, our investment criteria, and then a little bit longer slide, but at least one slide that how we are differentiated. And there may be some repetition there from what I just said, but hopefully that's helpful. So we do have this investment criteria. It's on our website. And obviously with anything, this is the focus and the truth, but always happy to expand. So a couple of things I want to call out there is that patient capital. So we are a 10-year fund, but our biggest LP is R&B Ventures. And so we can always pass off our assets to them and they're on balance sheet. So one of the downsides of VC or PE is that short time horizon, saying, hey, let's try to flip you in 3 to 5 years. I feel as though most family-run businesses, entrepreneurs run the business don't want to hear that timeline. I did mention that growth capital. We do some replacement capital. It's generally used as growth capital with that embedded human capital. I mentioned the sectors. We do love job creation. Now, we're not going to force you to grow jobs, but we've invested in kind of job creating sectors. We think that that's a big component of what we need here in Southern Africa. And then certainly we see an advantage in this kind of green energy and tech-enabled transition, which a lot of you are already working from what you just said. In terms of other investment criteria, again, these are high-level numbers. We say 30 million Rand revenue annualized. That's probably on the high side for a number of companies. but we also do get excited about high GPs or high growth rates or ARR, things like that. If you're in the need of high-powered human capital, route-to-market capabilities, digitalization experience, or expertise, or I should even add, if debt is expensive, I always say if this were the US or Europe, we probably wouldn't exist, but debt is absurdly expensive in this country, in this region. And what we've found is working capital gets brutal. Going to the bank for even a line of credit is really expensive. So our equity ends up being cheaper, which is unfortunate. We can also do convertible debt, usually at a lower rate. So some of the things we look for, kind of niche growth verticals or large dormant markets that can be reinvigorated. I can give some examples on the next slide. We do prefer somebody to have established domain expertise. We're not asking you to find a new sector. And then obviously quality earnings, platform options, quantifiable impact. So that is, and let's see, and I guess if I'm doing that, maybe I'll call out a few companies. I guess it's also on this slide. Example portfolio, so FarmTrace is our most recent investment. That's agri software for horticulture companies. iGen, battery storage. Hair City, it's a wig company. So black female beauty has been a big focus of ours over the years. Herbivore, plant-based alternatives, that's in the FMCG. Then Culture Fresh, hydroponic farming and controlled environment. So a lot of, I think, especially in fund two, a lot of manufacturing, a lot of agribusiness, a lot of vertical SaaS. Vertical SaaS meaning kind of, okay, I'm looking at some head nodding, so won't expand on that. Well, maybe explain why we think we're different to other funds. And we'd like to think that our entrepreneurs would agree. And so I did change the slide, right? I didn't pick slide, I'm on just screen 2. You can see how is Secha Capital different. Paul, thumbs up, thumbs down. Did I switch it? Yeah, great. So stage focus, which we talked about. Yeah, a lot of funds, either early stage VC or later stage PE. We're trying to be in that middle. Sector preference, yeah, we don't look for winner take all, whereas a lot of people are going to look for that. I mean, even battery storage, right? That company's run 100x. It's been a great investment from ourselves, but we're probably like the 4th or 5th largest battery storage company in South Africa. And that's fine. That's fine. There's plenty of opportunity for winners. Significant minority stakes, operational value add, and then mission driven. A little bit about the team. I'm one of 3 co-founders. I'm the only American. Don't worry, the other 2 are South African. So it's Dr. Mbuso Kumbule and Rashil Valab, who's actually having a baby as we speak, or he and his partner are, I should say. So he's about to go on paternity leave. And then this is some of the team that we've had. A lot of McKinsey, Bain, BCG alums, kind of younger people, some of the best in the bread of South Africa, that we kind of see as human capital arbitrage. We hire them and then we put them into your portfolio company. And maybe you couldn't afford them, or maybe you wouldn't see the value of some, smart, UCT grad who's, 25. But what we've found is with our training, and since we're giving them for free, it really is a growth accelerator. SPA right now is working with FarmTrace, and they gave him the title as like head of implementation. They're so busy working, in the business, they're not working on the business, and he's helping kind of just translate a lot of those growth initiatives into implementation. It's nice. I think we use a metaphor a lot. You have your strategy, you have your plan, you have your PowerPoint deck, what have you. That's the map. It's nice. It's good to have a map. It's usually crucial, but then you got to drive the car, right? And I think that's generally something that entrepreneurs maybe get a little bit frustrated with investors. They don't know how to drive the car. They think it's all map, and making the map was going to help you reach your point of arrival, and anybody could do it, but it's not that simple. So yeah, we've been around 6-7 years. We've got a very decent track record on companies that we invested in before, both from financial returns and from impact. We're building on our kind of playbook on how we can help companies grow, and seeing some clear growth opportunities, and happy to expand on kind of what we would do as a next step if you're looking for funding, and our due diligence process and how we see it. We'll stop there.
Awesome, thanks, Brendan. So